Hello and welcome to today's review of the True Potential portfolios. My name is Chris Leyland and I'm an investment director here at True Potential. So the format for today is that I'm going to spend the next few minutes talking about our flagship investment products. So that's the True Potential portfolio range. So firstly, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes that we're seeing from our fund manager partners, and finally discuss what changes have been made over the month to the portfolios. The month of April has been a strong one, with the portfolios all showing positive returns, rebounding after the pullback we saw in February and March. The two income portfolios have performed particularly well, boosted by the strong performance of the True Potential Threadneedle Monthly Income Fund with its UK bias. As we look further out, performance is excellent, with the aggressive portfolio now showing a return of nearly 40% since launch. Looking at markets themselves, equity markets have been the main drivers of return, with the UK leading the way, with the FTSE 100 up around 7% for April, bouncing back after a weak first quarter, enjoying the benefits of a weakening currency for those large global earners. Within bond markets, returns were muted at best, with UK gilts the main laggard, an area in general the True Potential portfolios are less exposed to. Moving on to the performance of the underlying funds that make up the portfolios, the True Potential Schroeder fund range has shown good returns, with their low weighting towards bonds helping to drive performance. The True Potential Close Brothers fund range has showcased good stock picking, with their holdings in Facebook and Visa doing particularly well. The portfolio's overweight position to Close Brothers has been a really benefit for April. Okay, so let's move on to the markets and look at the key themes that we formulate after speaking to our investment partners. And the general view is actually one of constructive growth, with market participants adjusting their expectations to a higher interest rate environment. Trade wars between the US and China look less likely, as it's in the interest of both parties to come to an agreement rather than to penalise each other with tariffs. Okay, so lastly, I want to just look at what changes we've made to the portfolios over the month of April. So firstly, Allianz, we've reduced overall allocations. Allianz use what we call a momentum style, and that's something that works very well when there are clear trends and markets are rising. However, as we look forward through 2018 and towards an environment of rising interest rates and interest rate normalisation, it was felt that this style could come under pressure compared to some of the lower risk managers. Schroeder, we have reduced allocations as well. Taking an asset allocation view, the funds have been positioned very well, but stock selection struggled. The fund range also carries the highest cost out of the True Potential Wealth Strategy fund range. Close Brothers, overall allocations have been reduced. The bias towards growth has worked very well. However, with growth stocks starting to face headwinds, it's unlikely that they'll provide similar returns to those seen in 2017. Despite the reduction though, Close remain at an overweight position within the baseline portfolios. Moving on to SEI, overall allocations have been reduced. The fund has a less flexible strategic asset allocation, making it less responsive than other TPI funds. Moving into a changing market environment, we have a preference for more agile funds. 7IM, we've increased allocations towards 7IM. They have a larger allocation towards alternatives, particularly as a substitute for bonds. The alternatives allocation looks to offer stable, above inflation returns and performance uncorrelated to either bond or equity markets, which should help mitigate risk in changing market conditions. So next, Goldman Sachs. So we have increased allocations, and that's through the True Potential Goldman Sachs Balance Fund. The fund is positioned short duration, less sensitive to movements in interest rates, and is well diversified with alternative investments, which should help to diversify risk. UBS, overall allocations have been increased. The fund has changed its composition to be more suited to the current market environment, adding to the existing alternative strategies within the fund range. Okay, so that's everything on the changes. In conclusion, what do we know? We know that diversification is key as we navigate through differing market conditions, and that's something that we can offer to a new higher level through the True Potential portfolios. That's what we call advanced diversification. Okay, thank you very much for listening, and I'll speak to you next time. Thank you.